Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope everybody had a very beautiful day. And in today's markets, guys, well, the green simply continues to the upside. SPY and QQQ putting in some nice gains for the day, but it was quite a mixed day in trading. Not all names were up. As a matter of fact, most of the S&P 500 was actually down today. Now, in today's news, guys, we came off of the backs of a very bullish PPI report that we got early on this morning. Producer inflation numbers coming in much lower than expected, which was an overall bullish sign for the markets, really building upon the lower than expected CPI, consumer inflation report, that we got yesterday. So in today's video, guys, we're going to do a few things together. We're going to take a look very briefly into that PPI report and see exactly what was said that was so bullish for the markets. Number two, I do have an earnings report prepared for you guys. We're going to be taking a look here at ADOBE. ADOBE coming in with their earnings after the close and benefiting from a 15% gain in the after hours after really crushing their quarter and reiterating very good guidance for the year. Nice to see them up after being pretty much down over 25% year to date. Nice to see them getting a little bit of a bump. So after we cover that earnings report, we're going to go through our major technical analysis rundown in terms of our major market indexes, then our big tech names, and that will pretty much be it, guys. Tomorrow, we will be doing the portfolio recap to end off the week. So without further ado, guys, a lot to get into this video. Let's get right into it right away. SPY up about 0.2%, QQQ up about 0.5%. However, guys, the market was very, very mixed. Definitely not the most broad day in recent memory, right? Big tech doing a great job of relatively holding gains, except for Google, Meta, and Amazon. Semiconductors doing pretty good. Microsoft and Apple were in the green. Financials coming back ever so slightly. The credit cards finally starting to get some bids, but a lot of your major banks were down. Healthcare putting in a decent day, to say the least, but the problems here, guys, relied in the bottom half of the market, right? Really not that broad. Only a few names performing well, such as Tesla. But for the most part, guys, very, very mixed market. And we can see that even best when expressed by the one-day relative performance. Technology really doing its part in lifting these markets up. But as I said, guys, most of the names in the entire S&P were red today, and that is expressed by most of your major indexes pretty much ending red on the day. Communication services led to the downside, obviously, by Google and Meta. So very, very mixed day of trading, guys. Just goes to reiterate the fact that we're at all-time highs in slightly overbought conditions. So really tough for institutions to bid prices higher and at these current levels, even despite the fact that we got two very bullish inflation reports back to back. Now, in terms of those inflation reports, let's get into the PPI producer inflation numbers right away. And we will see, guys, that they were actually very, very good. So the expectation for producer inflation was about 2.4 year over year, and we came in at 2.3, a very decent drawdown on producer inflation. Take a look at this, though. Wholesale prices unexpectedly fall 0.2% in May. Yes, PPI was held back by a 0.8% decrease in final demand goods prices. This is your goods deflation, and now coming through on the producer side as well. Very, very bullish for the underlying narrative of inflation going away, in my opinion here, guys. On an annual basis, the all items PPI rose only 2.2%, which is very, very good. That's very close to the Fed's target for 2% overall inflation on the consumer side and the producer side alike. Now, the May CPI and PPI data are favorable for our view that the Fed will be reducing its policy rate later this year. As of yesterday, guys, the expectation that was given by the Fed was only one interest rate cut by the end of the year. But when we take a look at the federal funds futures rates that are produced by Wall Street, they are still expecting at least two cuts by the end of the year. So Wall Street kind of calling the Federal Reserve's bluff, right? So now let's continue further. From the wholesale perspective, the PPI was held back by a 0.8% decrease in final demand good prices, which was the largest decline since October 2023. Within the category, the energy index tumbled 4.8%, largely due to a drop in oil prices, and food prices fell a further 0.1%. That is very, very good, guys. Let's take a look at the graph, right? Take a look at this goods deflation, 0.8% to the downside, excessively good. Services largely remaining flat. So largely the component of inflation, guys, both on the consumer side and the producer side, is still the sticky services situation right now. Now, take a look at your total PPI for pretty much the past 10, 15 years at this point. You can see that now we're pretty much back to our standards that we've been having prior to the pandemic, right? Actually coming in at a little bit of a deflationary read for the month of May. That is very good, but I want to bring your attention to how far goods prices have dropped since our peaks in 2022. Take a look at this here, guys. 0.8% deflation right now in goods for producers. That is very, very healthy for the overall economy and giving consumers their purchasing power back. Now, take a look at the services component, however. Services, this blue line right here, still not any deflationary reads pretty much since December of 2023. So it's been about 6 months, but at least services costs are really not ballooning like we saw back here in April, right? So very good read on goods and services. Services, although they have been a little bit sticky, still very far off the peaks that we had in late 2021 and early 2022. So all in all, guys, the moral of the story, inflation is coming down, and now we're finally starting to see it, whether we take numbers from the producer side or the consumer side, guys. Is the economy slowing down ever so slightly? Yes, that is the reason that a lot of these things are coming down right now. But is the economy slowing to an unhealthy pace? Absolutely not. This is just the long-term effect of higher interest rates for longer, finally pushing away inflation. And although that is starting to slightly affect the economy and the jobs market, still no major red flags as of yet, guys. The fact that the economy and the jobs market is slightly slowing down is just a byproduct of high interest rates. So what the Federal Reserve has to do now is make sure that they don't push this too far. If they keep interest rates too high for too long, it could have some very adverse effects on the economy. So far, we're not seeing that. We're seeing a little bit of tiny first indicators of that, but all in all, no major red flags as of yet, guys. Just a normal course, due to the high interest rate policy that is going on right now. So that's pretty much everything for your producer inflation numbers. Hopefully you guys appreciated that. Now let's dive right into our earnings, and it is going to be for Adobe. Take a look at this massive pump that Adobe has had in the after hours, almost up 16%. So I'll remind you guys, the story of Adobe so far this year has been that AI is going to eat their lunch. Yes, a lot of people have been saying that because of the new number one, the new large language models, and number two, AI generative content such as videos and pictures. A lot of people are saying, well, maybe Adobe is losing track of its moat right now. Maybe it's really losing, compared to other large companies that could basically replicate its business model with new AI capabilities. That is the reason that Adobe has been having a very, very difficult time this year. Now, the company has never come out and said that itself. That is just what analysts and investors have been expecting, right? So it was very curious to see if Adobe's growth was actually slowing down this quarter after the little blip that they had last quarter, or was everything pretty much picture perfect? Well, today, Adobe pretty much reassured everybody that their business model is not in jeopardy and that the company is still growing very, very well. Now, let's take a look, guys. Just a quick reminders, right? In terms of Adobe, very, very solid company nonetheless. $25 billion in buybacks, which are predicted to happen within the next year. That is 10% of their float. That is a huge number, guys. Relatively low debt in terms of the cash that they have on hand, and that really has not changed from quarter to quarter. You can see right here, their balance sheet is excessively healthy, guys. Way more free cash flow on a quarterly basis or on a yearly basis than they do have debt, and way more cash pile as a whole. This is a very healthy balance sheet. In terms of their expansion of EPS and revenue, gorgeous EPS expansion curve and gorgeous revenue expansion curve as well. Definitely no signs of a slowdown resulting from AI competition to their business model. They also have very high net margins, being a software company, right? Their net margins are actually quite good, usually always on an annual basis, ranging between 25 and 30%. And this most recent quarter was no different. They're also growing. They have decent shareholder management and executive compensation packages. So shareholders' compensation is also not that high at about 8.7%. And they're growing revenue and EPS at double digits every single year. So let's take a look at exactly what Adobe said to get such a beautiful bump. And once again, we're going to take a look at this very quick table by the Stock Market Nerd. Thank you very much for providing this information. Just want to do a quick rundown of their numbers. What did they beat? What did they miss, right? Well, as we can see, guys, in terms of their most recent quarterly earnings, they did have a very nice double beat on EPS, and they did beat ever so slightly on revenue too. Now let's take a look at the guidance, guys. The guidance is very important. Annual revenue guidance met the expectation, so no raise there. The EPS guidance was slightly ahead of expectations, so raising guidance on EPS, which is very good for the share price. And then their Q2, so next quarterly revenue guidance, missed by about 0.8%. Not that big of a deal. And their Q2 EPS guidance actually beat by 0.5%. So we can see one of two common things happening here. Revenue slightly down, but it doesn't mean that their EPS is not going up. Doing a good job of controlling costs, even though revenue is slightly below the expectations. At least they're able to boost EPS through cost control and share buybacks, which is very, very good, right? Now, In terms of their net margins, you can see down here, their most recent quarter, 38.1% in terms of net income margins, which is very, very good. It's even better than their Q2 of last year, which is good and in line with the last couple of quarters of data that we have back here, right? Really every single pretty much Q2 or Q1 coming in between 38 and 40% net margins. That is very, very solid net margins, guys. Nothing bad to say about the company. Pretty much a beat and raise across the board. High free cash flow as well. Really a good job from them. Let's take a look at what management had to say. Adobe achieved record revenue of $5.31 billion, driven by strong growth across the Creative Cloud, the Document Cloud, and the Experience Cloud, said the CEO. Our highly differentiated approach to AI and innovative product delivery are attracting an expanding universe of customers and providing more value to existing users. Adobe delivered outstanding Q2 results, and this is true, positioning us to raise our annual targets. Our market-leading products, strong execution, and world-class financial discipline position us well for the second half of 2024 and beyond. So definitely no shyness from management in terms of reiterating the fact that the company is growing and they are one of the AI leaders, despite what some analysts may critique of the company, right? Nothing wrong with this company so far. I do believe that a lot of this price action drop right here, guys, was due to external factors. A lot of speculation that Adobe's business model was under jeopardy. And as we can see now, for the past 2 quarters in a row, they have reiterated, no, it's really not. So maybe now they finally get that share price appreciation and start trending back into a beautiful weekly uptrend where I do believe they belong, guys. This is a company that's pretty much been down in the mud since the start of the year, coming into a big area of support, and they seem to be reacting very nicely from it. Now let's take a look at some of their further highlights here, guys. Not going to spend too much time on this, but I just want to show you, right? Total revenue expanding nicely, EPS expanding nicely, operating cash flows, guys, they are slightly down here, but that's okay. I wouldn't be too concerned about this, guys. I went through their financial statements, just a couple of one-lined items here that takes away from their operating cash flows, but not that big of a deal. I don't see a trend in decreasing operating cash flows, to say the least. In terms of their digital media, which is pretty much, 75% plus of their revenue on every single quarter, been growing very, very nicely across document and the Creative Cloud segments right here. Digital experience is also up. So every single line of business of the company, guys, is netly up. And now we have very nice increase in remaining performance obligations here, guys. 17.86 billion, 17% increase. So their total billings outstanding for the next year is quite good. Adobe banks about $20 billion per year. So this is just under 1 year of annual revenue that they've secured in new performance obligations. Very, very good. Repurchased 4.6 million shares during the quarter as well, which is a very good endeavor by the company too. Just goes to show you the company did a great job when the stock price was cheap of repurchasing a boatload of shares, which is going to heavily increase their EPS in the near-term future. So in terms of the valuation here, guys, I did a little bit of valuation here at the 536 mark where we were trading pretty much in the after hours. And we can see here that their PE, forward PE for 2024 at 536 is about a 29.7, not that bad. When we divide their PE ratio by their EPS growth rate for the next foreseeable future, we get a PEG ratio of 2.2, which is not that bad, guys. It is a it is a growth company in terms of technology, and usually it's very tough to find those below 2. If we can find them below 2, it is a very decent deal. And as a matter of fact, prior back here in the 440 range, they were under 2, which would have been a good level to potentially build a position in the company. Now, in terms of right now, guys, 2.2 is a little bit high. The way I would be potentially looking to play this, guys, in terms of the technicals, guys, let's just take a look at their longer term time frames, right? Monthly uptrend, they lost the monthly uptrend right now. What do they have to do? The bulls have to start everything from scratch. Eventually, we will need to get that monthly uptrend back. So as of now, when we're trying to make this initial rally, we are all the way up here already at the 530 mark. So weekly downtrend, right? Looking for that engulfing move, which we just got after earnings. Eventually, we will have to set the weekly higher low for the eventual trend change. If we do get a weekly higher low, coming back down, retesting this level right here, guys, 500 to about 490. I do believe that's a great swing trade location, because if we can get down here in terms of an entry, the stops go below the low, and the reward pretty much is all the way up here at about 640. So very, very decent reward to risk, right? If we're coming in here, we're only maybe risking about $40, and the upside is pretty much at this point, pretty much about, let's call it about $150, right? So very, very, very good risk reward trade for Adobe for a longer form swing trade. That is the type of opportunity that I will personally be looking for myself, maybe even some leap call options or some spreads if I can find them cheap enough. So that is pretty much everything I had to say about Adobe. Congratulations to them. Great quarter. And as I've previously said, I don't believe that their business model is affected adversely from other companies implementing AI. Adobe still has a very, very strong moat around several of its lines of businesses. And before AI can do a lot of the features that Adobe does for its clients, it's going to take a long time, guys, right? So no immediate threats to the company's business model, in my humble opinion. Now, let's move directly into our technical analysis portion of the video, and we can see, guys, not much has changed, right? So in terms of the SPY, I'm going to go through these quickly. Daily uptrend is currently underway, new all-time highs right now. However, we need to be very cautious here, guys. The daily is currently overbought for the SPY, the 4-hour slightly overbought conditions, and yesterday the 1-hour conditions were severely overbought as well, but sideways consolidation has done a great job in bringing that down. Am I saying that the markets are going to pretty much have a little bit of a taper off drop from here? No, obviously they can continue moving a slight bit higher. However, do we need to be a bit more cautious at these levels? Yes, it's very risky to be starting positions in this level. I would personally rather wait for a little bit of a back test. Let's say we run a little bit further and then come down here, back test our previous level of a resistance right here, 537. That could be the potential point of entry where I do go shopping for a few more companies. However, we need to also be cautious, guys, since we are in daily overbought conditions. That is a tiny little swing trade, but for building larger positions, guys, I would be tempted to maybe wait for our first daily downtrend into a little bit of weekly consolidation. Now, that could take another week to potentially manifest, but the bulls are looking good. Weekly uptrend right now, as soon as this move is finished, we're going to be looking for that weekly higher low, anything pretty much above 517.92, weekly higher low for further trend continuation. If we get a larger form weekly pullback, guys, back into the 531 level, that is going to be the area that I'm going to be looking to really build some larger form positions in potentially companies that have lagged behind this most recent 1 month worth of rally. Moving on to QQQs right now. QQQs doing the exact same thing as SPY, right? So daily overbought conditions, got to be careful here. 4-hour, very overbought conditions as well. But I just want to show you something, guys. Just because we're in 4-hour overbought conditions does not mean that we necessarily have to go down. As a matter of fact, you can see overbought conditions back here. What did we do? We just moved sideways for a very long time, right? And then even when we had this 1-day drop, it did not flush our lows and we continued marching higher. So a little bit of a divergence area there. That's why I say we can't just say that because we're in overbought conditions right now that we're expecting a drop. Even sideways consolidation, guys, will contribute to bringing this one down. So we really need to keep a closer eye, in my opinion, guys, on the 1-hour downtrend. That is going to be our guide. If we get a big 1-hour downtrend, which cascades into a little bit of a 4-hour downswing as well, we could be expecting some daily pullback that maybe could be lasting 2 or 3 days. As of now, daily uptrend is confirmed. As soon as we start pulling back on those lower time frames, going to be looking for the daily higher low, anything pretty much above 461.80, daily higher low for the trend continuation. No red flags whatsoever, guys, on the QQQs. As a matter of fact, the weekly looks excessively bullish. Trend continuation past our all-time highs right now and tons of space between our weekly higher low at 443. So no red flags at all. Just a little bit cautious here, guys, at the top end of our move, just considering all of our short-term overbought timeframes. Now moving on to financials. Financials, guys, really cutting it close here, right? So daily downtrend is still underway and we are looking for the bulls to protect this weekly. As you can see now, we've kind of flushed the lows on the 1-day trade today, but we did not close below there. The close of the weekly is going to be tomorrow. If ever we do close down in this level right here, guys, it is going to be, unfortunately, a weekly downtrend, and then we are just in for a little bit more, maybe tight monthly consolidation on financials. I am very surprised, guys, that after such bullish CPI and PPI reports and yields coming significantly down over the past couple of days, that financials have not had it in them to muster a little bit of a rally. Usually these are susceptible to drops in interest rates and usually benefit from an inverse correlation. Technically, they go up when interest rates go down, but they just have not been following that correlation so far, right? So as of now, guys, daily downtrend is clearly underway, and we desperately need to protect these lows up until tomorrow. If we close where we are today, guys, it is a weekly downtrend, unfortunately. And as I said, monthly consolidation simply continues. Could be a good location to start building some positions in some of your favorite financial names that maybe have been lagging behind the sector. Two of my favorite ones so far are Visa in these lows right here, and even a company like MasterCard in these lows right here, looking like a very attractive opportunity. They really have not done anything for the financials index in the past 2 months, and that usually does not last forever. So all in all, financials looking a little bit dicey. We still do have a little bit of support areas down here, but the bulls really need to get their butts in gear to start changing this daily trend to the upside. Now moving on to XLV, give me a very quick second. All right, so moving on to XLV. Today, we got a perfect back test of our level of support, which was right here, right? This extension of the line, prior area of support, current level of support as well. And we were saying as soon as this move tops out, look for a daily higher low, anything pretty much above 140.68, daily higher low into potential trend continuation. Our first backtest area was respected, 26 EMA, and this horizontal line of support. So we will see, can the bulls get the job done and continue this into a daily uptrend? If, for whatever which reason, they fail and make a lower low and start retesting some of these lower areas right here, daily downtrend, that is okay. We have a lot of space on the weekly now, guys, right? Nice new weekly uptrend. As soon as we have a little bit more consolidation, going to be looking for a weekly higher low, anything above 140.53, weekly higher low for further trend continuation. So moral of the story, no red flags just yet. Bulls have created a ton of space to get a daily higher low in continuation, or at the worst case, daily downtrend. We have a ton of space on the weekly as well here, guys, to resume our uptrend. Now, moving on to semiconductors. Semiconductors, another day of upside. That's no secret there. One of the major contributors to that was AVGO after their company earnings yesterday, still up about 12.2% today. So they were one of the major contributors to bringing SMH up. The other one was NVIDIA, the company that just never seems to go down at all. Very good day for semiconductors. A little bit overbought now though, guys, can't lie. On the daily, slightly overbought. On the 4 hours, slightly overbought as well. And our short-term timeframes, although they were a lot overbought yesterday, sideways consolidation has brought them down. I would be a bit nervous here, guys, opening up positions at these higher levels, considering daily and 4-hour timeframes being overbought. So what are we looking out for here? Daily uptrend is currently underway. As soon as we consolidate, anything pretty much above 250, going to be looking for that daily higher low for trend continuation. Prior range of resistance right there could be your first touch area if you do want to make a swing trade attempt at the trend continuation. However, guys, if for some reason the markets get a little bit weak because we're at higher than expected levels right now, let's say we go for a little bit of a weekly pullback on the SPY, weekly pullback on the QQQ, how could that maybe impact semiconductors? Well, for whatever reason, we get a little bit of a daily downtrend here. Look at all this space on the weekly. Anything above 200 pretty much, just going to be looking for that weekly higher low for further trend continuation. I would be targeting, guys, the juiciest area for me, even though we are a bit far away from that price right now. Keep in mind, NVIDIA still is not consolidated, and even Broadcom after their earnings could come down a little bit. I would be tempted to make a little bit of an attempt if we do ever revisit this lower range right here, prior all-time highs and the beginning of our range of resistance, talking about 238 down to about 233. This is the zone that I will be more tempted to place a little bit of an entry trade for that trend continuation. As of now, too overbought for me, unfortunately. Even for a continuation trade from here, it is a risky endeavor. Now, moving on to IWM. IWM coming down a little bit today, 0.87% to the downside. The bulls are trying here, guys. Got to give it to them, right? Daily downtrend, nice engulfing move, over 100%, trying to set the daily higher low for the trend continuation. The problem is, guys, is the last 2 days, the bulls have given back a lot. Take a look at the size of this pullback, almost 80% pullback. Usually when you see 80% pullbacks, guys, the best the bulls can do is sit up in a little bit of a tightening range and then gather their strength and then make the rise forward. So we'll see if the bulls have it in them to V-shape this, but a more likely scenario, considering the size of the pullback, may just be a little bit of a tightening range, and then we may get our daily trend change attempt. On the weekly, guys, what are we doing right now? Still trying to set the weekly higher lows, anything above 191.55, trying to set the weekly higher lows for further trend continuation. This is a decent area to bid, guys. If you're looking for longer term swing trades on the Russell, I see no problem bidding here. 198 all the way down to about 192 could be a good swing trade opportunity, considering the fact that we're trying to set a monthly uptrend and really blast through this 212 level. As I've said once, and I'll say it again, guys, this is a part of a risk on trade. And until the conditions are favorable enough for Wall Street to really go all in on the risk on trade, guys, it may still take some time in my opinion, that's going to be closer to our first rate cut when these things will really start flying. Now, let's move on to the Dow Jones, our last one. Let's move on to our big tech names, shall we? So Dow Jones, not looking too bad here, guys, but the bulls are definitely struggling, right? A little bit of a daily downtrend right now. So you can see that double top and the lower low today, a little bit of a daily downtrend, which leads us into just further weekly consolidation, right? Very tight weekly consolidation at the bottoms. But one thing that the bulls are doing very well, they're defending this area of support with their lives. 38,600 down to about 38,300. That is the area that they're looking to build a little bit of a base of support before potentially making a trend change attempt north. That would need a break of 39,100, guys. Break 39,100. Daily uptrend is confirmed. Our weekly bottoms are set, and then we'll be looking to make a further weekly push into the all-time highs. However, we need to be very, very careful, guys. Come down too close to these lows, right? And you may just end up with a scenario where we could breach them and head to even lower weekly levels. That would be a weekly downtrend. Would not be the best for the Dow Jones, but keep in mind on the monthly is still looking very good just in terms of monthly consolidation right now for the past 2 months running, right? The bigger area of support, if ever the Dow Jones breaches this location right here over the next few weeks, which would be a considerable breach here, guys, talking maybe, 2 all the way down to 4%. We would need a heavy index consolidation for that to happen, right? Well, just know that you have tons of big monthly support down here in this region, and I don't believe the bears are going to get through that very, very easily. So although there's a lot of space between us and this trade right here, we have to just be ready for any and all scenarios, right? The Dow Jones, notably, a little bit weak on this bounce, only about 50% of the way up that they were able to bounce. Not the best probabilities to set up for the daily trend change. However, at least they're forming a base of support. So this one is still a little bit of a watch for me. I would maybe try and play the breakout on Dow Jones futures only if we get a break above 39,127. You could have a little bit of a continuation trade right there, and the stops would go pretty much below these lows, keeping stops tight, entries here, and we're obviously targeting the all-time highs. So I'm, pretty much just by the looks of it, pretty much a 2-to-1 reward to risk trade. Not the worst endeavor in my opinion. Now let's move down to a little bit of big tech, shall we? So Apple continuing its meteoric rise to the upside, 0.55%, but you can kind of tell from this chart, guys, the bulls are getting a little bit tired, right? Daily RSI is all the way up at 80 right now, and I remember showing you guys this yesterday. Every time we hit 80, we can get a little bit of a drawdown, right? Let me just zoom this in so it makes sense. Every time we hit 80 on the daily, could have a little bit of a drawdown. Does it mean that the stock is going to collapse? No, just a few little days of cool down and then potentially another bit of a leg up. We can see it all the time when it hits 80s, right? Hit 80 right here, and then it was pretty much a downtrend, but this was 2022 when all assets were getting destroyed. If we go back to one of our glorious bull runs, right? Even at the peak of a very nice bull run like 2021, whenever we hit RSI levels around the 80 mark, usually get hit with a little bit of a pullback, Not to say the stock can't go higher afterwards, but you guys can see the common trends, right? Get up to the 80 level, and this at least a little bit of a drop and then sideways consolidation. So that's maybe what I'm forecasting for Apple, guys, considering the fact that we're getting very, very overbought right now. Could just be some time for daily consolidation. No signs of it yet, though, guys. For that, we really need to see an hourly downtrend formation. So far, not that much, even though we do have pullback on the 4-hour as well, still maintaining that trend, right? So what we really need to see is a big fall off on the hourly, cut these lows around 211, and that will pretty much trigger your 4-hour downtrend to be underway. And then we will also know that daily consolidation is underway too. So just looking for a little bit of daily consolidation in my opinion here, guys. And if we want to put the fibs on these moves, since we are past the breakout, we have to use the fibs, right? There's no support right here for us to use. So what could we maybe be forecasting? The bulls maybe be able to pull back to the 50% fib level, or maybe even the 618. If they pull back to the 50, could be due for another test of the all-time highs. But if they pull back too much to the 618, then we might just be expecting some range-bound consolidation for Apple. So that could be a quick way to analyze depending on the size of the pullback. Now, let's move on to AMD, shall we? AMD still doing absolutely nothing, guys. Still stuck in our range of consolidation. The same thing we've been having for the past month at this point. So daily downtrend is still underway right now, below our moving averages. So the bulls are not looking the best, right? For them to really look solid, we need to build up a little bit of momentum and start challenging these 169s, get this daily uptrend back in motion. If for whatever reason we can't do that, we start really failing these levels and breaking down below, you guys know the drill. 152 is a very nice next point of support. And then obviously we have our huge area of support down here, 140, 132. I'm not really expecting the bulls to lose so much ground that we end up in this location right here. But if the overall market consolidates and semiconductors as a whole consolidate, we could potentially get that, guys, maybe coming down into the lower 150 range. The moral of the story for me for this trade, guys, is if we do start retesting some of these lower levels, 150s, that is when I'm going to be going very, very heavy on some short puts, 150 to about the 140 range. I love this location to swing trade AMD right now. Still, just trying to pile on for the weekly higher lows for the uptrend shift. So I really don't believe that the bulls are in any immediate jeopardy of losing these locations right here, but we just have to be ready, guys. In the event the indexes have a larger form pullback, we could potentially, revisit these areas very, very quickly, right? 150, 145 is not off the table just yet. So that'll be very, very juicy location for a little bit of swing trades. Now, moving on to Amazon. Give me another quick seconds, guys. Sorry, my throat is a bit dry today. All right, so moving on to Amazon. Amazon down about 1.64%. Amazon, I mean, they had mustered a very, very nice rally off the bottoms, right? So daily downtrend was heavily underway. Nice engulfing move. And eventually we were saying that when this move tops out, going to be looking for that daily higher low for the continued trend change. Anything pretty much right now, the bulls have tons of space. Anything above 174, daily higher low for the trend continuation, reacting nicely from our moving averages today. And even if we pull back a little bit further here, guys, I like this trade opportunity. 180 down to about 178, our big prior range of consolidation all the way back here, right? Talking about 180 at the lowest point down to about 175, right? Juicy pocket to be trading Amazon, in my opinion, especially for some short puts. In terms of the weekly not looking too bad, right? Just no continuation of the trend expansion. We've kind of been stuck in sideways consolidation for the past, month and a half at this point, almost 2 months at this point, right? But it's good consolidation. Why? Because where are we consolidating, guys? On the weekly, we are consolidating above our all-time high area of resistance. We are using it as support in preparation of the next leg higher, which I do believe will take us into the $200 psychological. So all in all, Amazon not looking bad at all, despite the fact that it's largely been sideways for the past 2 months. Moving on to Google now. Google down about 1.57%. Not the biggest deal for them, right? Now, daily uptrend for Google, looking for the daily higher low. Anything above 174.41. Still have a little bit of space here for the daily higher low for the trend continuation. However, if Google loses these lower areas, unfortunately, they will lose the daily uptrend and they may be in jeopardy of setting up for a daily downtrend. Would that be the end of the world, guys? Not really, guys. We still have a little bit of space on the weekly, anything above 171, looking for pretty much the weekly higher low for further trend continuation, but it's not looking the best, right? Bulls looking a little bit weak up here on the daily and a little bit on the monthly as well, right? This short-term structure as well, not really building many support levels at these higher levels right here. One that I could kind of derive right now would be this whole 173, 120, 172, but it's not the most solid considering the fact that it's only really been there since their past earnings report, right? So a larger form Google trade, in my opinion, guys, is if we lose this weekly, that may take us back down to these lower ends right here. Call it 165, 160. This is my ideal trade location for Google. I'm not saying that we're going to come down there, but if ever Google is not able to maintain these higher levels and does have a little bit of a dip, I'm just saying if it does come down here, I will probably be trading the living heck out of it. So looking not too bad as of now, still a lot of space between us and that 165, 160. We are just once again preparing for the event that those levels come. What are we going to do when they actually get there? Moving on to Meta right now. Meta not too bad either, 0.93% to the downside, but that's okay, guys. Daily uptrend is clearly underway on Meta. We are looking for the daily higher low. Anything pretty much above 454, looking for that daily higher low for the trend continuation. Now, where could we potentially come back down into? This is the level that I'm going to be on the watch, guys. 482, big prior support right here. It's going to be current support as well. And the moving averages are all curling into that area. So if we get a little bit of a retest of the 482, could be a juicy swing trade opportunity to enter in or around this location. The stops go below the low and we are targeting all-time highs. And then the pretty much 550 psychological level could be a nice juicy swing trade opportunity, seeing as the bulls are now in control of all major timeframes, control of the monthly, control of the weekly, once again, gorgeous weekly uptrend forming right now, and even control of the daily once again. So retesting this range could be very good. All in all though, for Meta, no red flags. We may not even get back to there, right? We may just bottom out very soon using these prior two candles, may bottom out very soon and continue this daily uptrend into the all-time highs. I'm just saying, if we come down into here, how am I going to play it? Moving on to Microsoft right now. Microsoft looking excessively strong, guys, 0.12% to the upside. One huge daily upswing. So daily downtrend, fully engulfing move. Eventually, we're going to be looking for the potential back test of the prior all-time high range, right? That is another breakout retest trade that could potentially be a very juicy opportunity. The entry would be right here for further upside continuation. And the stop loss, we can put a fairly tight stop loss, guys, pretty much under this guy right here, around 421, 420. So we'd be pretty much risking maybe $30 to $10 worth of risk. And the upside from 432 to about 450 would be the psychological target. You're risking about $10 to make $20 worth of upside. So the risk reward profile is fairly juicy at these locations once again. All in all, though, Microsoft looking excessively strong. When you'll be ready to see this turnover, guys, is when we really start losing this hourly time frame, right? So far, not the case. If we do lose 437 on the hourly downtrend, expect daily consolidation to be underway, and that may be when we get that trade entry. Now, moving on to Netflix. Netflix looking very, very decent as well, right? Netflix up about 0.5% today. Really not doing much. Still trapped at this range pretty much over the last month and a bit, but very, very nice zone of accumulation. Reminds me of Amazon. Why? We are accumulating above the prior 52-week range highs. Now we're accumulating above that location right there and really doing a great job of respecting our short-term moving averages. Now, to get the daily trend change breakout, guys, we need a clear break of 658, Daily uptrend will be underway, and then you can say that your weekly consolidation is finished and on to the next weekly leg higher. This on the weekly, guys, screams bull flag to me, right? Huge engulfing move up, sideways consolidation slightly down, bull flag in other words, for the next leg of pop. That is really what it's looking for Netflix right now. And the next level that we may pop into is the all-time highs at around 700. I see no red flags on this trade whatsoever. Extremely bullish consolidation by Netflix. And even if we were to lose a little bit of momentum here in the next couple of weeks, that's fine. So much space on the weekly, guys, to set the weekly higher lows for that trend continuation, pretty much all the way down. 615, 605 could be a juicy location for some entries. Moving on to NVIDIA right now. NVIDIA with another 3.5% day to the upside. This company just does not stop going up, guys. $3.2 trillion in market cap. Very gorgeous daily uptrend right now, right? Any pullback, as soon as we do see signs of pullback, you'll be seeing that by a loss of the hourly trend and loss of your short-term moving averages. Then you will know that the daily consolidation is underway. So far, no sign of that, but when it does happen, anything above 117.50, going to be looking for that daily higher low for the further trend continuation. You can see what NVIDIA is doing, guys, using prior highs as support and blasting higher. So the next leg lower could just be a tap of 123.62 and maybe the move higher. However, if we've run too much on NVIDIA, eventually you will see the daily downtrend rollover, and then we will be officially looking, guys, for some potential weekly higher lows to be set in these markets right now. And the location that I'm pretty much eyeing at this point, guys, is going to be your lower, maybe 110 area, right? That could be a juicy little pullback on NVIDIA. It's really not that far away. It's about 14% away. I know that sounds like a lot, but sometimes NVIDIA, guys, when NVIDIA pulls back a lot, right, you can have these 5, 6, 7% days back to back, hit short-term oversold conditions really, really quickly, and that may just mark the end of your weekly consolidation. The same thing that happened here back in the month of April. But in my opinion, that's going to require some overall market consolidation. I don't believe NVIDIA is just going to consolidate all on its own while the rest of the markets are rallying, just because it is one of the market leaders right now, right? Whatever it does, the market tends to follow. Now, moving on to Tesla. So Tesla did a great job here today, right? So what happened today? Tesla shareholders vote to uphold Musk's compensation plan when they pretty much reapproved the $56 billion compensation packages by 73% of the votes. Very, very strong, guys. This lifts a lot of uncertainty out of the stock. To be quite honest with you guys, it's not that I got a little bit nervous, but I just did not want to play it. I knew that it was going to be a very volatile event and it could pretty much move either way, especially with CPI yesterday, the Fed comments on interest rates, and the vote was just a little bit too much volatility for Tesla, specifically for myself. So I chose not to play it, but considering the fact that now we do have the results on the vote and inflation is coming down, this is pretty much Tesla's room to run, right? Those two bullish catalysts, interest rates, inflation and interest rates are very, very sensitive points of data for Tesla, right? When they're bad, Tesla does bad. When they're good, Tesla tends to do well. And now that we also have the uncertainty from the vote coming off the table, essentially, guys, it was uncertain whether if the vote was not approved, it was uncertain whether or not Elon would remain CEO of the company. He hinted at that, right? He never said publicly, if the vote is a no, I'm leaving. It's just, there was a little bit of blood in the water in terms of you knew that Elon Musk, if he was not approved for his compensation package, guys, it would leave a bad taste in his mouth, and he may look to do something about it in terms of either bringing the Tesla's AI capabilities into a brand new company, or maybe even there was rumors of him potentially stepping down as his role of CEO. So now those issues are pretty much off the table. Elon now has the green light from his shareholders pretty much, which is why Tesla had another little bump today. So Tesla now finally breaking above this range of consolidation, looking to back test it right away. So currently right now, guys, there could be a juicy little swing trade opportunity considering the fact that we're back testing this previous area. Big resistance should now be big support. So I may be looking for this swing trade myself after today's price action. If tomorrow we start dipping into these levels right here, guys, I may be taking a little bit of a swing trade on Tesla in the form of maybe 28, 45-day call options to the upside, targeting the break above all the way to the 200 level. And I may even be writing some short puts below our range of support down here, maybe 172, 170. So that's the type of trade idea I'm looking for Tesla. Just looking for pretty much the daily uptrend conversion after this push and break above a month's worth of resistance. So not looking too bad at all on Tesla. We'll keep a very close eye on this one, but so far looking quite bullish, guys, especially over the last 2 days, right? Two major catalysts that could potentially went very negative for the stock have come in positive for the stock. So now we may have a little bit of room to run. Next area I'm targeting, of course, the $200 resistance. Moving into Palantir right now. Palantir not doing excessively bad on the day, right? They were down about 2.10%, but not really some of the minus 4 or 5% days that Palantir can sometimes see, right? We are still in the context of a very nice daily uptrend right now. Still looking for the daily higher low, anything pretty much above 2266. Looking for the daily higher low for further trend continuation. We are still above our range of support right now, which is pretty much 23 all the way down to about 2250. This first green box right there should be acting as a decent level for the bulls to really form a little bit of a base here. However, if we roll over, guys, and break the prior low, 2270, and set up for a new daily downtrend, well, you guys know the drill. Just going to be looking for a weekly higher low at that point, anything above 20.6, weekly higher low for the potential trend expansion continuation, right? And I reiterate, if we do start revisiting these lower levels, guys, maybe coming down back into the 22s, I will be writing short puts on Palantir, 2150, 21, 20.5, depending on how low we get. I will be bidding this area all day, guys. Why? Because it's strong monthly support, big prior monthly resistance, looking for monthly support in the context of a glorious monthly uptrend, looking for its higher low for the continued trend expansion. So I really do like this location on Palantir. Moving on to PayPal right now. PayPal not having a great day at all, guys. Just getting washed the past 3 days of trading, right? Another 3% to the downside, coming dangerously close to losing our last line of defense here at the $61 level. If we do for some reason break below this support level, guys, unfortunately, that will become resistance and may just provide an opportunity for the bears to build a lower high here and maybe even send it lower and challenge our prior $57, $58 range of support right there. So not looking the best. What do the bulls have to do? Unfortunately, they have to start everything from scratch. Such a huge move down, guys. Eventually, we'll need to get a bounce. And then we measure the size of the bounce once again. Let's say the move down finishes there, right there tomorrow, and we start bouncing. You then have to measure the size of the bounce, guys. And the size of the bounce for this one has to be pretty juicy. We need to get at least as high as 65. Get us back to 65, and we can talk about a potential daily trend reversal. But come too low here and breach beyond this support level, and you may just end up, guys, at that point, the move would be really big at that point, right? In this point, if we come all the way down here, let's say 59, 51 below, at that point, guys, you know, even if you do get a 50% retracement, it's going to be fairly dicey for the stock to really be able to recover this nicely, in my opinion, guys. At that point, with such a huge move to the downside, the best you may end up with is maybe just a tightening range and forming a better base of support in this location right here. So PayPal really coming up on pretty much the knife's edge right now, the line in the sand level, because if we lose that, I will remind you guys, we are losing our last line of weekly defense. Look at this massive engulfing move, not looking the best for the stock. That's why I do believe, guys, if we start closing below here, a better area for potential re-entry may just be 59, 58, 57 for some longer term swings. That's pretty much everything I had for you guys today. Hopefully you guys enjoyed today's video. If you did, consider dropping a like, would really appreciate it for the growth of the channel. Number two, if you haven't subscribed to the channel yet, consider doing so. Thank you so much to each and every one of you who have taken the time to subscribe so far. The channel has grown so much in the past year, guys, almost up to 1,800 subscribers. So I thank each and every one of you. We do these videos every Monday through Friday. So if you're not subscribed, consider doing so and rejoining us every day of the week. And now lastly, guys, if you have any questions whatsoever, as usual, if there's a stock ticker you want me to take a look at, guys, leave it down below in the comments. I'm doing them on Saturday. All of the subscriber requests, doing them on Saturday. If you want me to look at a potential options play that you're thinking of, let me know down below in the comments, and I will give you my insight as to how I personally would make a play like that. Anything you want, guys, I'm always open to anything you guys have to ask me. Leave it down below in the comments and I'll get back to you usually within the first 24 hours. So take care, guys. Have a great rest of the day trading tomorrow. I will see you tomorrow after the close. Peace.